A man walks into a bank. He deposits $1,000. By the end of the day, the system has quietly turned that into $10,000. No printing press, no gold, no real money added. Just numbers. Now zoom out. Governments borrow trillions. Banks create money out of thin air. And a handful of institutions quietly steer the entire system. So here's the question: who actually controls the world's money? And more importantly, why does it feel like most people don't? To understand this, we need to go back. Once upon a time, money was simple. Gold, silver, physical value. If you had money, it meant something tangible sat behind it. Then came banks. At first, they just stored gold. But they noticed something interesting. Most people never withdrew all their money at once. So banks started lending out deposits. If 10 people deposited gold, the bank could lend most of it to someone else while still promising everyone their money was safe. This was the birth of modern banking. Today, it's called fractional reserve banking. And here's the shocking part. Most of the money in the world isn't printed by governments. It's created by banks when they issue loans. Money isn't just printed, it's typed into existence. Let's simplify this. Imagine a game. You deposit 1,000 inches a bank. The bank keeps 100 and lends 1,900 to someone else. That 1,900 gets deposited again. Now the bank lends 2,010. This repeats again and again. From your original 0.1000, the system creates nearly 0.10,000 inches total money supply. No magic, just multiplication of debt. Because here's the truth. Money is debt. Every rupee, dollar, or euro exists because someone somewhere owes it. Now enter central banks. They sit above all banks. Institutions like the Federal Reserve or the Reserve Bank, they don't just regulate money, they influence how much exists. They control interest rates. Lower rates mean more borrowing and more money created. Higher rates mean less borrowing and money disappears. It's like a giant tap. Turn it on and the economy floods with liquidity. Turn it off and everything slows down. But here's where it gets deeper. Governments don't just control money, they depend on it. When governments run out of funds, they borrow. From banks, from investors, from the system itself. And that's how global debt explodes. Trillions stacked on trillions. A system built not on wealth, but on promises of future payment. Now imagine what happens when people stop believing in those promises. Banks had been creating money rapidly, lending aggressively. Housing prices kept rising. Debt kept growing. Everything looked stable until suddenly it wasn't. Borrowers couldn't repay, assets lost value, and the system froze. Because if money is debt, and debt collapses, money disappears. Entire banks stood on the edge of collapse. So what did central banks do? They stepped in. They created even more money. Trillions injected into the system to prevent total failure. This process has a name: quantitative easing. It saved the system, but it also revealed something unsettling. When things break, the rules change. Money can be created instantly to protect the system, but not always to protect individuals. So what does this mean today? It means the system isn't controlled by one person, not a single government, not a single bank. It's controlled by a network: central banks, commercial banks, governments, and global institutions. Together they shape the flow of money, and that flow determines everything: inflation, housing prices, job markets, your purchasing power. When money increases too fast, prices rise. When money tightens, growth slows, and ordinary people feel it the most. Not because they control the system, but because they live inside it. So who really controls the world's money? The honest answer is uncomfortable. It's not one entity. It's a system built on trust, managed by powerful institutions, and influenced by decisions most people never see. Money isn't just currency. It's a tool, a lever, a mechanism of control and stability. And the moment trust disappears, everything changes. So here's the real question. If money is just a system of trust, who do you trust to control it?